These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will record the receipt of payment and making of a deposit into our bookkeeping problem in Excel, keeping in mind how this same information might be input into accounting software such as QuickBooks. We're going to take a quick look at how this might be entered into QuickBooks and then jump over into our Excel worksheet and put this information into our Excel worksheet. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We've seen both of these items before, meaning we've seen the receipt of payment and making deposit. We're going to try to do them both at the same time so we can see them linked together in this presentation. However, we're going to go a little bit faster since we have seen both of the items before. Within QuickBooks, the first item that we're going to look at is the receipt of payment. The assumption here being that we have already issued an invoice in the past for, in our case, a guitar that we shipped out, and we are now receiving the payment in the mail for that guitar that was shipped out. We're going to receive the payment, and then, of course, at the end of the day, we're going to take that payment, probably a check, and deposit it into the bank and use the record deposit in the QuickBooks system in order to record that transaction. If we look at the receive payment item, then all we need to do is put the Anderson, in this case the customer, and QuickBooks will say, hey, we got a couple invoices for Anderson, or one in this case. Is that the one you want? We're going to say yes, because we have a check that we have received in the mail for that $430.50 related to that invoice, and we're going to write that it's a check, and that's all we need to do. And QuickBooks will then perform the journal entry, which will decrease accounts receivable. This will decrease the amount owed to us, having the fact that a customer has paid us, and it will record the cash, but not into the cash account, general cash account, or checking account, but into an undeposited fund account. That's kind of a new step, or the different step than we see in theory that we will have to deal with, and we'll see how to deal with it when we record this in Excel. Then we're going to have another receive payment, so same item, we're same assumption. We had an invoice prior, we're receiving a payment in the mail, and we're going to say this was for Eric Music, so another receive payment. And this is once we put in the name of the customer, QuickBooks says, is this the right invoice? And we're going to say that's the one. We got $525. This, once again, decreasing accounts receivable, increasing cash, but a specific cash account, that of undeposited funds. And then we're going to take those deposits and go and record them into the bank. And that would coincide with us actually going to the bank and depositing the checks. So when we do that, we're going to make this deposit, and QuickBooks will say, hey, you got two checks that we think are outstanding right now. Are those the ones you want to deposit, or which ones would you like to deposit? We would then check them off, and the bank would then, QuickBooks would then deposit both of them and combine them together so that when we reconcile the bank, they will be combined, and we'll be able to check them off at the same point when we reconcile. That's the process within QuickBooks. We're going to go through now and record that in Excel. Here we are now going to record those two receipts of payment and then deposit into the checking account of those two receipts payments. We're going to record it in this area over here. Note that all prior journal entries have been hidden, so they're just in the side here, just hidden so that we can work with information that's right next to what we're working with and have as much on the same screen as we can. So, first thing we're going to say is that Anderson Guitars, a customer, gave us a payment, received a payment in the mail of $430.50. First question, is cash affected? We're going to say that yes, it is. However, it's not the checking account that we got. It's the undeposited funds. We're going to put this into undeposited funds until we make the deposit. So we got a check. it's going to increase undeposited funds. It is a asset account with a debit balance, and therefore to make it go up, we will do the same thing to it, which is another debit. So I'm going to copy this account, going to put that on top in Q5, right click and paste 1, 2, 3. The date's going to be 1/28, and the amount that we received in the mail is $430.50. 0.5. It will round here to 431 because we're rounding off the cents in this problem just to make it look a little bit cleaner. And then we're going to have a credit of that same amount, so I'm going to put negative of that number, or we could just put a negative 431. But I'm going to put negative of that number. That's kind of like our plug formula. And the other side is going to go to the receivable, meaning this person, Anderson Guitars in this case, owed us money represented in this number. That number then needs to go down because we now have received payment. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. So we're going to copy the receivable, right click and copy the receivable. Put that in cell Q6, right click and paste 1, 2, 3. Then we're going to go to the Home tab, Alignment Group, and increase the indentation. And now we have journalized the journal entry into the general journal, and we will now post that to the general ledger. In order to do that, we're going to first freeze the panes. We're going to put our cursor in AJ1. We're going to go to the View tab up top and go to the Windows group, freeze panes, and freeze the panes. Then we're going to go and record this. Now it's down here, it's the third to last asset. It will be the third to last asset on the general ledger as well. We're going to scroll to the right till we see that undeposited funds. Going to scroll down, there it is. We can't see them both on the same screen right now. We could try to make it a little bit smaller. I'm at 120. Going to make it go down to say 90. And that's really as far down as I want to go. So it's right there. And so I'm going to have to scroll up just a little bit to get that. So we are in cell AU29. We're going to select equals and then scroll up just a bit and point to that 431 in R5 and enter. Going to go back up to 120%, 120%. Now, if that was difficult to maneuver around, you could just type in equals R5. And it should pick that up as long as we are in the same area in the worksheet. That puts 431 into undeposited funds. If we scroll back over to the trial balance, we see that as well in the undeposited funds here. So here it is in the undeposited funds. I had to make a bit of an adjustment there, but it's back there. Your worksheet should be working fine. And there's the 431. If we scroll down, we'll be out of balance by the 431 until we record the other side. No effect on net income. We'll then go to the other side. That's going to be in accounts receivable, our second account on the trial balance, and therefore our second account on the general ledger. Scrolling over to the right, we see the accounts receivable. We're going to scroll down to the next next area, which is going to be AR16. AR16 equals, we're going to point to that 431. That's going to bring this debit balance down because we did the opposite thing to it, crediting it to 1,740. That same 1,740 will be on the trial balance, and it will put us back in balance. No effect on net income. None of these accounts were in the dark blue income statement accounts. Next thing we need to do is the fact that we recorded something to the accounts receivable means that we have the detail of who owes us that money over here. I mean, we have the detail of when that money was owed or paid off within the accounts receivable general ledger, but we also want to know who owes us that money. We need to go to the subsidiary ledger and mark off specifically that this customer, Anderson Guitars, no longer owes us that $431. So we're going to scroll to the right, and we're basically going to post the same amount like we did to the GL here to the accounts receivable subsidiary ledger, similar to a GL, or in essence a GL that is in order by customer rather than just by a date. So it's going to be way over here in CR, so we're in the CR and CS columns. We're looking for Anderson. There's Anderson right there, and we're going to debit the amount actually we're going to credit the amount because we're taking away this one here, for the 431. So that's going to be equals this credit. That's going to bring the balance down to 0. Adding up all of them then, if we sum them all up, we get to this 1,740. That should be the amount in the GL as well as the amount on the trial balance, 1,740. Scrolling back to check that out, we're just scrolling all the way to the left. And scrolling down, we see the 1,740 there. That looks correct. If we look at the trial balance, we see the 1,740 there as well. So we're all tied out and it looks correct. We're going to do the same process for another person that gave us a payment. We received another check in the mail. It's been a good day. Also on the 128, and that was from Eric Music, and we got a check for $525. Same journal entry. We're going to say, is cash affected? Yes, but not the checking account. We're going to put it first into the undeposited funds. It has an asset. We're going to make it go up by doing the same thing to it, which in this case is a debit. So we're going to copy that. Put that in the top, undeposited funds, right click, paste 1, 2, 3. And the amount will be $525. We will then credit something in S9 for $525. I'm going to use the plug formula of negative of that number and enter. So there's the credit. And the credit will then go to the receivable. People owed us money. People now paid us off that money. Therefore, the amount owed needs to go down. That's a debit. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So we will copy the receivable, put that in Q9, right-click, paste 1, 2, 3. I'm going to format this by going to the Home tab, Alignment Group, and increase the indentation. Then we'll post this. So this is the undeposited funds here. Undeposited funds is the third to last account on the trial balance and therefore the third to last account on the general ledger. We're going to scroll over till we find that third to last account of the assets on the general ledger. Scrolling down, it's going to be down here. There it is. And so I'm not going to decrease the size. I'm going to have to scroll up, it looks like, either way. So we are in AU30. We're going to say equals, and then I'm just going to scroll up a little bit till I see that journal entry. It's the last journal entry. We want to pick up that number in R8. Equals, or enter, and there it is. And if that scrolling around is difficult, then just for a while you can put equals R8, and that'll use the formula. You could hard code it in there too, but if you do so and you make a problem, it's much more difficult to find it, and I highly recommend using formulas and working on them as you go through this. That's helpful for more than just accounting. So then we're going to go to the left and scroll back. If we go down, we see that we're out of balance by $525 till we record the other side, and we see that $956 in undeposited funds. Now we're going to record the accounts receivable. Second account on the trial balance, second account on the general ledger. Scrolling over to that second account, we're going to go to the credit side of it. We will be in column AR, row 17, cell AR 17, equals, and pointing to that 525 brings the balance of 1,740 down by 525 to 1,215. We should also see that 1,215 right here in AK6. Scrolling down, we see that we are also back in balance. No effect on net income, note, even though we are receiving cash, because there's no effect on these blue accounts for one reason, and there's no effect on those blue accounts because we already received the revenue in the past, recording the revenue when we completed the work, when in essence the invoice went out. So that's going to be the deposits. Now we have this amount in undeposited funds. We've got this here in undeposited funds, which we then need to go to the bank and deposit. So we're going to take it out of undeposited funds and put it into the bank. When that happens, grouping them together, not putting them into the bank at 431 and 528, but at the grouped amount of 956, and that will help us to match out the bank balances with the bank statement to the book balances when we do the bank reconciliation. So in this case, we're going to say the checking account is going to go up. We're going to put that deposit into the checking account. It has a debit balance. We are going to increase it by doing the same thing to it, which in this case is another debit. So we'll copy the checking. We're going to put that on top in Q11, right click and paste 1, 2, 3. The amount, the date is 1/28, and the amount is that 956. And if we look at the decimals, just to make the rounding right, it's 956.50. So that, I'll put 956.50, which will, now let's keep it at 956. We probably should have used pennies, but that's okay. We'll keep it at 956. And then we're going to credit something for the same amount. And there we have that. Now we just need to know what that credit is going to be, and that's going to be the undeposited funds. So we have the undeposited funds here. That needs to go down to 0. It's a debit balance account. We're going to do the opposite thing to it, which is a credit. So we'll copy the undeposited funds. We'll put that on the bottom in cell Q12, right click and paste 1, 2, 3. We're then going to format that, home tab, alignment, increase the indentation. And there we have it. We have journalized the journal entry in the general journal. We will now post that, the process of posting, to the general ledger. Before we do that, note that this account here, we never adjusted the subsidiary ledger. And so let me highlight that. We decreased the accounts receivable. We had not adjusted the subsidiary ledger for the fact that the customer, in this case, was Smith Eric Music, no longer owes us that money. So let's do that now. I'm going to go all the way to the right to find that subsidiary ledger. Make sure we pick that up. Otherwise, we'll be calling Eric Music saying that you owe us $525 when in actuality they have already paid it. So we're going to scroll back here. So here it is. We've got Eric Music. There's the $525. Note our number here wouldn't match. It doesn't match right now what's on the trial balance because we had not picked up this. This is also something that would be automated in accounting systems if we put a customer in each time we deal with the accounts receivable account. So in cell CW15, we're just going to say that that equals, point to that 525, bringing this balance back to 0. If we were to add up all of them, and note all we did was just record the same thing, and this is in essence like another general ledger, just recording the same detail by customer. Now we're at 1,215. That should be the amount on the general ledger, 1,215. I'm going to scroll left, 1,215, 1,215 on the general ledger, and we're scrolling all the way till we see that amount on the general ledger, 1,215 there. So that's in accounts receivable, and we're going to see it on the trial balance as well, 1,215. Okay, so we've completed that. So I'm going to go ahead and make that back to its normal color. All right, now we're going to go ahead and post these out. We have undeposited funds. That, remember, is the third to last asset account. And, well, let's post the top first. We got the checking account, which is our favorite first account. So here we have the checking account. We'll scroll down to the checking account, new item in the checking account in AM18, and say that that equals, point to that 956, increase in the checking account by 956, going to 126.86. We'll then post the undeposited funds, which is the third to last account, which that 956 is in. We expect it to go to 0 after this. Scrolling to the right and scrolling down, we see the undeposited funds right there. We're going to go to the last cell, so we're going to be in the credit side, and we want to record this part. So I'm going to have to scroll up just a tad. So we're in AV31 equals, scrolling up just a bit to pick that number up in S12 and enter. And that brought the balance down to 1. That's a rounding difference, so I'm going to be okay with that. We're in essence at 0. And so we have the 951. If we scroll back over, then we're going to scroll up. We see that same amount here, and we should be back in balance down here. Looks good. No, nothing happened to net income, note, from this, even though we're getting money, because we already recorded the revenue at the point in time that we issued the invoice. Let's take a look at the financials. So I'm going to say we did something to cash. So we'll see what that does over there. We did something to the receivables. We did something to undeposited funds. So we'll take a look at those accounts. Scrolling to the right to see those accounts on the financial statements. Note the financial statements being generated automatically. So we have the cash, accounts receivable updated, undeposited funds should probably be in cash, but in essence it's around zero at this point, except for rounding. And there's the 239, 246, which matches 239, 246. No impact on net income from this transaction, leaving us with the same balance of 725. That 725 found on the statement of owner's equity to help calculate the end owner's equity of 151, 122. That same 151, 122 is also, of course, on the balance sheet here. Hello, in this presentation, we're going to talk about the receipt of payment and then making a deposit into the bank for that payment. We talked about both of these individually in a prior presentation. Now we're going to do them both at the same time, looking at the process of the receipt of payment and the depositing of that payment afterwards and the effect on the financial statements in QuickBooks Pro 2018. If you've been working with us, we will be continuing on the Get Great Guitars problem here. If not, that's okay. We will be working on the receipt of payment and the deposit of payment. If you have access to the backup file up to this point in the problem, then you could restore that by going to File, Open or Restore, and restore the file. It would be good to make sure that we're on the same point, whether you're going through the entire problem or whether you start at that point, because there will be data we're going to enter here and there'll be data afterwards, and if we're on the same page, it'd be probably a little bit easier. But if we're not working with the same set of data, then we can still get the concepts of the receipt of payment and the recording the deposit. Why do we need those two steps? What are those two steps? Let's see those two steps in sequence. I'm also going to have the open windows open over here, so I'm going to go to the View tab and select Open Windows so we can toggle back and forth through the open windows, the only open window at this time being the home page. If you don't have the home page open, that's going to be under Company and Home Page. Now we're working down here in the customer section because typically we're going to receive payment right here from the customer. So that's what we're going to do now. We're going to get the payment from the customer. Now that implies, of course, that in the past we must have had created a invoice. So we invoice the customer, now we're going to receive payment. If we were to receive payment at the same point in time as we issued the goods, in this case the guitar, so we're selling guitars, so if we sold the guitar and got payment at the same point in time, we probably wouldn't be using the receive payment, we would just have created a sales receipt at the beginning point. So when we use this receive payment, we're basically saying there's something happened in the past, an invoice, and that means that we did work in the past. A lot of service companies will be in this format, like a bookkeeper or a law service. They'll do work, send the invoice out, receive payment later in the mail. That's what we're doing here. So now we are at the point of receiving the payment within the mail. Now note within our process here, within our track, that's not where we stop. We have another step to get to the bank. And again, if you're looking at the financial accounting in terms of just recording journal entries, probably not used to this middle step. This middle step's not something we typically have just in financial recording. We would typically think that if we got payment, we're going to increase cash, we're going to decrease the receivable. But we haven't really gotten to the bank, so there's a difference in the types of cash we have here. Here we have cash that is undeposited, and here we have deposited cash, basically our checking account. The two things we want to have happen here, we want to differentiate those two, and we want to make sure that once it gets into our checking account, it does so in a way that it's grouped so that our books will match the bank books, so that when we reconcile matching our books to the bank books, a huge internal control that I highly recommend everyone doing, it will be easier for us to do that. It'll be easier for us to match those up. So that's what we're going to do here. We're going to first put it into undeposited funds and reduce the receivable, and then deposit them, taking it out of undeposited funds and putting it into the bank in the grouping that we want to make it easiest for us to reconcile the bank accounts. So first we're going to click on the receive payment. So you're imagining we got a payment in the mail here. We got a payment in the mail and it was from Anderson Guitars. So I'm going to say that's the customer that we have here. So here's Anderson Guitars. We could just type it in there though. I'm going to start typing Anderson Guitars and then tab, and I would get used to that tabbing through. And you don't have to select a payment option here. I mean, it's not a required, but we're going to select just as a reference here what the payment is going to be. And we're going to say it was a check. And we got a check in the mail from the invoice in the past. This was for, and note we could type in the amount would be a check, but we could also just check off the invoice down here. So this invoice, original amount due, we're going to say check it off. It's going to say we're going to enter that amount there. If you check that off here, and we're going to go, yep. And then it puts the payment up top, shows us the balance still due down to 0. Amount due applied down to 0. Note, however, obviously if we put less than the amount of the invoice, then we would still have a amount due down here from this transaction. We're going to have the date is going to be 01/28/21, and we got the payment type. Here's the invoice that we are referencing to. What's this going to do then? It's going to reduce the accounts receivable, reduce the amount that is owed by Anderson, and it's going to increase a cash account, but not our checking account yet. It's going to increase undeposited funds. So let's record this, take a look at that. We're going to say save and close. Let's now take a quick look at our main financial statements and see if we can see what that did. We're going to go to reports. We're going to go to company and financial, scrolling down to the balance sheet standard, changing the dates to, and actually I'm just going to go straight to the customized so I can change just the date range at one time. So customized report, we're going to go 01/01/21 to 12/31/21. And I want a range so that when we drill down on the data, we'll have a range within the transaction report. So I'm going to say OK. And what that does then, it only has one date on the balance sheet because it's as of a point in time. However, when we drill down on the data now, we'll have a range, a general ledger type, a transaction report by date that will have the date range. So if we look through this now, we're going to say that accounts receivable should be affected. So because we're going to reduce the amount owed by Anderson, double clicking on that, there's the receivable, and it has been decreased by that amount. If we double click on that, we get back to our form. So there's the customer payment, closing this back out, closing this back out. We also know that we would think it would affect cash increase, and that's what we would typically think in our normal journal entries. And it did kind of, but it put it into this undeposited funds. So now we've got this undeposited funds of 430, and we need to go ahead, if we double click on that, we can see that it's the 430 there. Double clicking on that, there is our customer payment. So I'm going to close that out. Those are the two accounts that are affected. We do not want this undeposited funds hanging around there after we deposit the funds. So we're going to have to make sure that we record that second piece of the transaction, that piece lowering or closing out undeposited funds and increasing the checking account. That being something that often gets missed by many people, and we ended up with this balance in undeposited funds and end up with trouble reconciling our bank accounts. So we want to make sure to take that second step. Note we also have the other report affected. If we go to reports up top, if we go to customers and receivables, we know that the aging report or the customer balance detail is also going to be affected. We'll see by customer that Anderson now has paid us right there, no longer owing us. So we should be able to match these out within our customer payments, and it looks like this is the case so far, bringing the balance back down to 0. If we double click on that, we get back to our customer payment. Let's close that out and close this out. We still have our open windows over here, going back to the home tab, and then we're going to do this one more time, one more customer. We will then go back to the receive payment. So remember, when we select receive payment, we are thinking that we got a payment for something that happened in the past. So you're imagining we got a check in the mail, and we're saying, and there's that check from that invoice we sent out in the past, and we're going to say receive payment so that we can lower the amount due to us from the person who wrote the check or the company who wrote the check. That in this case being Eric Music. So we're going to say Eric Music, and again we could select the drop down and find them, and or we can type in here. We should never have, by the way, a customer that is not in our list when we have a customer payment. It's never going to have a new customer that gave us a payment because we must have gotten a payment for something we delivered in the past. So unlike when we create an invoice or something like that, we might have a new customer. We might have to create a new customer field here. But in the case of a payment, we should always have the payment. So we shouldn't have that problem if you're in the receiving department where you got a payment where you see a payment for someone who doesn't exist in terms of a customer. We must have sent out an invoice to somebody, so we kind of should be able to tie that out in some way. So we're going to say tab, and it's going to be a check again, and there's what we want right there, that 525. So I'm going to click on that, check that off. We're going to say yes, and the date is going to be the 28th. That's what we're looking for. And the amount due, the amount applied, down to 0, the amount due. This is the original amount. This is the amount of payment. And so everything looks good. Everything checks out. So we're going to go ahead and say save and close, noting what we think should happen here. This should reduce accounts receivable for Eric Music no longer owing us money. And it should increase the cash account, the account of undeposited funds. So we're going to say save and close. See if that's the case by going to the balance sheet, still open in the open windows. There's the balance sheet. We're going to say that cash didn't go up. Accounts receivable went down though. If we double click on that, we see that we have this 525. Double clicking on that, we see that there's our customer payment. So closing that out, what's the other side of this transaction? What else is happening? The undeposited funds is also affected now at 955.50. Double clicking on that. We see the 525 at the bottom. Double clicking on that. We see that information once again. There is that. We're going to close this back out. Close this back out. This 955.50 is what now we need to move to the checking account when we deposit it. We're probably going to deposit it at one time because we're going to go to the bank at the end of the day and make all deposits at the end of the day, grouping the deposits at that point in time in the same format. They will be grouped on the bank statement, thereby making our bank reconciliation an easier process. So we're going to go back to the Home tab and do that next step. That next step being the recording of deposits. When we look at the recording of deposits, it does indicate with this little red 2 that we have 2 outstanding deposits, meaning we have 2 items that we put into undeposited funds that need depositing. So if we double click on, or if we click on this one time, we don't need to double click on it, we'll click on it one time, and we get this pop-up item happening. Now, if there were nothing outstanding, we would just have this window, and it would not indicate that we'd have anything outstanding to deposit. We can enter a deposit directly into that window, but this window is showing us, hey, you've got a couple things that have been received payment from that you should have, like in your desk drawer somewhere in your office there, somewhere in your establishment, that you need to go to the bank and deposit. And we're going to say that is true. We're going to check those both off. We're going to check those off. Those are the 2 received payments we've received in the mail, the 430.50 and the 525. Those are them, and we're going to say OK, and then it will autofill this deposit screen. We are going to the checking account. It should default to our main account, typically our checking account, and we're going to keep the same date. That's going to, because we're depositing these as of the end of the day. We got them in the mail. We're going to the bank at the end of the day, putting them into the bank. This is typically how it would be the last time we ran through the deposits. We broke the deposits out in accordance with a problem, trying to show the idea of depositing in different formats and also grouping the received payments as best we could for the problem. And this is more like we would see in practice, in that we would want an internal control of whenever we get a payment, we want to go to the bank and group those payments and deposit at the end of the day. That is, of course, a piece of the internal control system. One, to have those deposits in there at a similar time as they have been received so that the bank can track them and we can reconcile everything in time. And 2, just not to have the deposits in the establishment any longer than they really have to, rather than have them within the bank. So this is the practice we would want to have. There's going to be those 2 deposits we're going to have here. Here's the total amount, that familiar $955.50. What is this transaction going to do when we save and close? It's going to deposit it into the bank. Checking account should be increasing by the amount of this deposit. The other side, being undeposited funds, should then go down to 0. So we're going to say save and close. See if that is the case by going back to the balance sheet, looking at the checking account, and we're going to double click on the checking account, see what is in there. And then this last item here is our deposit. Double clicking on the deposit, we see there it is. So the deposit has gone into the checking account. That is good. The other side of it should be in undeposited funds. Note that undeposited funds, however, has gone away. If we want to check the detail in undeposited funds, just to make sure that that is what is happening here, that's the other side of the transaction, we have to go somewhere else other than the financial statements. The financial statements not showing any accounts that have 0 balances. Couple ways we can do that. One, we could go to the banking and go to use register. And typically when we go to the used register, we're looking for the checking account. But in this case, we could go to any account. So QuickBooks allows us a register with any account. And if we go to the undeposited funds account, we can say okay, and we could see this activity. There's the activity bringing the undeposited funds to 0. If we were to double click right on this little DEP, then we would go to that screen where the deposit happened. So that's one way we can double check the detail and say, okay, yeah, it went down to 0 from that transaction. Other way you could take a look at it is, if this is easier or makes more sense to anybody, you can go to lists and you can go to chart of accounts. And there's our chart of accounts. So this is kind of like our trial balance here, but it's going to give us all of our accounts, not just those that has balances within them. And then we can go back to our undeposited funds. And I think if we just double click on it from here, it'll take us to that same register. And then we can see that amount again. And again, if we want to check the forms that created these, we can double click on those, and there they are. So that's going to be the process of both receiving payment and recording the payment, going back to the home tab, typically done in the same day. So if every day we get payments, we should basically be doing that. We receive payment, deposit the payment in accordance with the grouping that we have there, and then the crucial thing we want to do at the end of each month is to reconcile. This will help with our reconciling process, reconciling our books to the bank account, which is a huge check because the bank keeps pretty good records. And if we can say our records match the bank's records, then we have a pretty good idea over cash. If we have a pretty good idea over cash being affected in all of these cycles, vendor cycle, the payable cycle, or the purchases cycle, the customer cycle, or the accounts receivable or sales cycle, the employee cycle, or the wages payable cycle or payroll cycle, all of them are affected by cash. And therefore, if we're able to reconcile the bank account and say that our cash balance is good and double check it through an outside source, that's going to be a huge check, not only for cash, but for all of these cycles. So it's a big internal control. And we'll take a look at that at a later time.